how single stock investing can be better than an index fund. So when you're valuing your own companies through investing in single stocks, you have the ability to find undervalued companies where investing in an index fund, you're dragged along by the greater market. This gives you personal benefits from doing your own research, as well as opportunities to find great value in these companies that are trading on stock exchanges. Index funds spread risk, but they don't give you the opportunity to outperform the market. Unlike being able to choose your own stocks. As we know, not all stocks are equal. Some companies innovate, grow, and reward their investors, while others fade. When you're investing in an index fund, you miss out on picking the best while having to live with the worst. So, how do we find these companies? Well, firstly, we want to look for a competitive advantage or a moat. This is when a company has a factor or benefit that significantly makes it easier for them to keep their market position as either the leader or in a oligarchy, in a duopoly in the market. So let's give some examples. Either your Nike, which is one of the largest shoe brands in the world, or Coca-Cola with a distribution base and amazing flavor that is worldwide. Sure, let's say you went to some random place, even in India or anywhere, US, Europe, all over the world. If you ask for Coca-Cola, they probably have them. So that is the real elements of having a competitive advantage. Having something that no other brand can compete with. For example, yeah, in most places, if you ask for a Pepsi, you could probably get it. But let's say you're in Mexico. What's more likely? They're more likely to have a Coca-Cola than Pepsi. Secondly, we want to look at their fundamentals and their financials. So a company that has strong financials is significantly more likely to be able to invest in better opportunities, continue to grow, and find opportunities in the market. I think the best example is Berkshire Hathaway, the largest financial investment company and that I can even think of, probably even in the world, run by Warren Buffett, one of the best investors in the world, which has $100 billion in cash and cash equivalents. So that company could find either an acquisition or an efficient way to use its capital and make significant growth on it. Thirdly, we want to look at high level of management and a strong brand. Let's say Louis Vuitton with Bernard Arnault. He is running a conglomerate of how many companies? So many. The most amazing luxury goods companies in the world. And he allocates the capital while letting them do the work. so efficiently. It's a magical story that hopefully I'll get to talk to you about in the future. And finally, a long-term vision. If we're investing in a company and risking a large portion of our net worth, we want to understand the company has a long-term perspective, so we can invest and trust the management and trust all the other investors in the company. So their time horizon helps us understand what other investors and the management team are thinking. But we also have to think about the risks. Obviously, we could go into recession, but the more important risks are what could change in leadership or the brand or our competitive advantage, the things we've already been talking about. So what you sort of want to look at is it very volatile, or is there any company specific risks or market specific risks? Like, let's say a fashion company, high fashion, they're keeping up with the trends, but they make a mistake and their winter season is completely off. Well, they could lose significant amount of business, which could even continue into their next season of releases. These are the risks we want to try and avoid. We want to look for a company with strong track record that backs itself. But even some companies with super strong track records don't last. Sure, look at Kodak, one of the Fortune 500 companies only 30 years ago. Gone. Probably haven't heard of it in years. They sold film for cameras and the cameras themselves. But everyone has an iPhone or a smartphone or Samsung or any other one of these brands, and you can just snap, take a photo. So easy. There's no reason to carry around a big camera just to take 5 photos when you could capture all these moments with your phone. So we just have to be careful with stuff like this. So obviously, I personally hold some index funds as well as some other individual stocks, and I'm probably further on the side of a significant portion in individual stocks. But if you believe that investing in an index fund is safer, I completely understand, and maybe this channel isn't for you, but I hope that you can learn something from me anyway. And if not, and you believe that you can find significant rewards in companies and through investing with your own research, then please comment, subscribe, like the video, and continue on this journey of being able to find great companies with me. Thank you very much. Matthew out.